So as usual, we start with the economic calendar, looking for reports that will affect the market that we're trading. So today is the 4th of May, Wednesday, the 4th of May. And you can see there's a report of high importance due out from the Eurozone, which will obviously affect the market we are looking at, which is the Euro-US dollar. So that's coming out at 9 a.m. GMT time, which is 10 a.m. UK time. So that's something that we have to be very mindful of, a report of high importance. And then we've got another report of high importance coming out at 2 p.m., which is 3 p.m. UK time from the US, which again is another report of high importance. Again, that will have a huge impact on the Euro-US dollar. Obviously, you always have to remember that when you trade currencies, you trade them in pairs. So you always have currency pairs. So we are trading the Euro-US dollar. So any reports coming out from the Eurozone or from the USA would have an impact on that currency pair. So you find that, so that's the last report of high importance coming out at 3. And you always find that the market tends to trend sideways until the last report of high importance. And that's the last report of high importance. So you have to trade extremely cautiously between now and 3 p.m. So if you're a very cautious trader, you could just keep out of the market. You can just switch off, go away, take the day off till 3, come back at 3 and trade after the report is announced. But I tend to place one trade prior to the high report coming out, and if I end up being unsuccessful with that trade, and then stop trading till after the report of high importance. So that's my own trading plan. Again, like I said, at the end of the 2 weeks, you can decide whether you would do the same or whether you would just keep out of the market completely till after the report comes out. But the main thing is for you to observe what happens on a regular basis, what happens to the markets prior to the last report of high importance coming out. Then you make an objective decision as to whether you trade before the report comes out or not. So we're going to trade carefully prior to 3 o'clock. I've sent you all out a webinar invitation at midnight last night. We're still going to meet at 12, but we'll meet again at 2:50, 10 to 3, 10 minutes before the report comes out, and that will be the last meeting for today. We will not be meeting at 8:30, so the last meeting will be at 2:50. We'll also go through placing options trade at that time because the US market will be open at that time. So we'll place a virtual trade. There's no clear option trading opportunity, but we'll just place a virtual trade just to go through the process of how to place an options trade at the same time at 2:50, well, after we've done the day trading. Okay, so I haven't had a look at the calendar. We decided what we'll do. We'll go to the charts. We'll start with the 1-year daily chart. And as usual, we already know that the market has been uptrending. And you can see that the Euro-US dollar is extremely bullish, but there are no clear swing trading opportunities at the moment. But it's an uptrending market. So we'll go to the day trading. So we can see from yesterday, we initially had the market going up, then it started to fall, then it was going sideways, which we always expect from from 9 p.m. to midnight. So again, always remember from 9 p.m. till midnight, the market tends to trend sideways. There's no point trading between 9 p.m. and midnight. Again, that's an observation you can always make. So I can always say, if you haven't had a live trade by 7, 8 o'clock, you could just delete that pending order. If you're already in a live trade, then fine, you can decide whether you leave it till the next day. But there's no point placing a new trade, after 8 o'clock, because that's just an hour before the U.S. market closes, and you can see that from 9, the market just goes sideways, and then it can pick up again after midnight. So you can see it's been going sideways in a narrow range for a while, and then it fell, and it's been going sideways again. So really at this point in time, the market could keep either going sideways till 3 p.m. Like I say, if it goes up before then, I'll be happy to buy just above the pivot point at 14,828. And if it crashes down and starts to fall, I'll be happy to sell below the first support at 14,760. So I have a pending buy order just above the pivot point at 14,828 and a pending sell order. So like I said, before 3 o'clock, if the market takes the buy order, I would delete the sell order. If that buy order turns out to be a successful trade, fine, that will be the end of my trading for the day. But if it turns out to be a losing trade, I will not place any more trades till 3 o'clock. So that's the plan so far for this morning, and those are pending orders. Any questions on that? If you have any questions on that, you can click the hand button or send your question through the question box. I'll just save that for the blog. Any questions before I go through the MACD? We're going to talk briefly about the MACD, and we'll then go through looking for option trading opportunities. We're looking through our watch list for option trading opportunities. Okay, so if there are no questions, we'll have a chat about MACD, and then after that, we'll go through our watch list, our options watch list. Obviously, if you have any questions while I'm talking about MACD or going through the watch list, to go ahead and ask by clicking the hand button or sending the question through the question box. Okay, so let's talk about MACD. What is MACD? MACD is it's a very good indicator. In fact, interestingly, MACD was the first indicator I learned to use when I started learning how to trade. So when I first started trading, MACD was the only indicator I was using. I used to put all my trades with MACD signals. And although my trading plan has evolved so much with time that I rarely use the MACD now, but I still use it occasionally, and I still always have it on my charts. Okay, so that's MACD indicator there, MACD, which is the full meaning means the moving average convergence and divergence. So that's the full meaning for the MACD, is the moving average convergence and divergence. Again, we'll be doing the theoretical basis of most of these indicators again as we go through the weekly webinars, and we'll be going through all of them in more detail, but I'm just going to talk about how you can use it in practice. So this is now the 1-year daily chart. This is the 1-year daily chart. And usually for the 1-year daily chart, you use the MACD setting of 13.26.9. So that the 13.26.9 is the MACD setting for the 1-year daily chart. And if you want to actually place the MACD, let me start by actually placing the MACD indicator on the chart. So we'll delete it. So if you want to place the MACD indicator, you click on your indicator button there. Brings up your list of indicators. You look for MACD. Select MACD, click Add Indicator. And like I said, the settings are user 13, 26, and then 9. 13.26.9, and then close. And that brings up your MACD. Obviously, you can resize the indicator box there. So you can make it smaller, you can make it bigger, to suit yourself. Now, the MACD is what we call a momentum indicator. It's a momentum indicator. It indicates whether the market is gaining momentum or losing momentum. So that's the key with MACD. So if you see, because like we said, the market never goes up in a straight line. So you won't see the market just going up and up and up and up and up and up and up. And sometimes that's where the MACD can help you decide when would be a good time to get into the market. Because if you see a market like this, that you just see is going up, this is the mistake some traders make. Maybe someone buys here and the market is going up, then they tell their friend that, oh, the market is going up, you better go and buy. And then the friend then decides to get into the market at the height of the move, where the market is losing momentum, and then they jump in when the market is about to fall. So this is where the MACD helps you, because when the market is moving like that, you're asking yourself, is this gaining momentum or losing momentum? The same way too, if it's falling and you're selling, again, you want to see, is it gaining momentum or losing momentum? And that's where you see the MACD. The histogram, you can either use the MACD histogram or the MACD lines. But the histogram is a better visual representation of the MACD. So let's start here. You can see here where the market is falling. And then it's making a lower low. So you can see here it's making a lower low. But if you see the MACD here, this red bars indicate the market is falling. But you can see here that this highs here, or this peaks here, are more or less the same size. So they're not making lower lows like the market. So it's opposite to the market. So again, that's an indication the market is losing momentum. Another easy way to see whether the market is losing momentum is looking at the height of the histogram bars. So you can see here when the market is going up, you can see the histogram bars getting taller and taller. And then you can see here where the bars are getting smaller and smaller. That indicates a loss in momentum. And it's indicating that the market is about to fall, which it did there. And again, you can see here when the market fell. So although the market is falling here, you can see the momentum losing pace. So it shows you the momentum of this fall is fading off. So again, when it starts building up, when the bars are getting higher and higher, it means the momentum is gaining speed on the downside. When the bars are getting smaller and smaller, it means this downtrend is losing momentum. And then again, you can see where it starts to go up, it starts to gain momentum. Again, always remember indicators. MACD is an indicator. Always remember that indicators don't predict the future, and they're not always 100% accurate. So again, it gives you information, and then you just have to interpret the information and decide whether to use it or not. Again, always remember the cardinal rule of trading is you trade in the direction of the trend. So, that's one of the mistakes I made when I started using MACD in the beginning, is that you don't ignore the trend of the market. So for instance, if you went to use the MACD to trade, you can see obviously that the market is in a strong uptrend. So you can use the green histogram and take the buy signals. So you can buy when the green starts to form. So if you miss that move there, you can wait for the market to lose momentum, pull back. Then when it starts building up momentum again, you can then buy because the market is uptrending. But you ignore the sell signals, because if you sell, you'll be trading against the trend. So in an uptrending market, you take the buy signals, and you can see here where the market, let's move it to that period. So you can see here where the market was falling. Then you can do the opposite. Where it was falling, you can take the sell signal. So when the red histogram forms, you can sell. If you miss that move there, you ignore this buy signal because the market is falling, and then here you can sell. Ignore the buy signal and then sell. And also, you can use the MACD lines to trade. Remember, this is the 1-year daily chart, so you use the 13.26.9. So you can use the MACD lines too. So you can see here when the blue line crosses below the red, that's an indication to sell. And you can stay in the market selling till the market crosses above it again. So when the blue line now crosses above the red line, that's an indication to come out of your sell trade and an indication to buy. When it crosses below again, that's an indication to sell. When it crosses above, that's an indication to buy. But again, if you want to refine your MACD use, again, because it's a downtrending market, you ignore the buy signals and only take the sell signals. So that's MACD in a nutshell. And then you can also use it for day trading too. You can use it for day trading, but the setting you use for day trading is the 6.21.2 setting. The 6.21.2, and just take that away. And it's still the same principle, although you can see that there tends to be a lot of signals during the day because you generate a lot of data. You generate more data during the day. But again, you can see when the market fell, that's the sell signal. That's the buy signal. That's the sell signal. The buy when it crosses above, sell when it crosses below. So again, you can use it for day trading using the 6.21.2. But like I said, you have to know that you still have to first determine the trend of the market and then decide whether it's a buy or sell signals you take. Let's see, there's a question here. I'm just trying to confirm if our buying order was placed 2 points above the pivot point, not above the first resistance. Yes, it's 2 points above the pivot point. Yeah, because you can see that the market was downtrending there, then started to go sideways. So our sideways trend was around there. So at this point in time, when the market was trending sideways, yes, we would not have used the pivot point. But obviously, you can see where the sideways trend has been broken, and that's the market is no longer trending sideways at that point anymore. It's now downtrending. Then it started going sideways here. So that's why we can now use the pivot point. But if the market was still trending sideways between those lines this morning, so if the market hadn't broken that sideways trend, if the market was still going sideways around here this morning, then we would not have used the pivot point. We can only use the pivot point now because the initial sideways trend has been broken. And once the sideways trend has been broken, then we don't need to worry about that previous sideways trend anymore. We'll start looking at the market at the more recent point. The interesting thing about trading is that you need to look forward, forward and backwards, forward and backwards, forward and backwards, which can be a bit confusing sometimes. But if you look at it from a logical point of view, don't forget, first of all, you're day trading. So as a day trader, like I said, what I want to do first is look at the most recent data, the 2 days, 5 minutes chart. So I will start with that and see how the market has been over the last 2 days, and walk from there, and we can see where the market went up, then started to come down, then it went sideways, then it went down. So the sideways trend I wouldn't have wanted to trade. I'll be using the more recent data. But sometimes you find that if you still don't get enough information from your more recent data, if you have enough information from your more recent data to trade, then you stick with that, because don't forget, you're a day trader and you're trying to profit from swings in the market during the day. But sometimes you find that if the market is, in such a haphazard fashion and it's all over the place and you can't make any sense of the market from the 2 days, 5 minutes, then yes, sometimes you need to go further out and see if there's a overall pattern that you're missing. So if you find that, all of a sudden the market today just looks terrible, yes, sometimes I will just go 1 week out and look and see if there's a bigger picture. So you can just go to 1 week, 5 minutes and see. So you can see the market really has been sort of going sideways for the last week. But again, remember, like I say, you are a day trader, you're not a swing trader. So as you see, you can sometimes make money within these swings in the market, but they only become relevant if you find that, say for instance, today will be a good example. If you have, again, it's just for academic purposes, if you have sometimes 2 consecutive losses around this area, then yes, you might look at the bigger picture and think, well, I'll just probably stop trading and wait for the market to break the overall sideways trend. So yeah, sometimes you first look at the more recent data. Then if the market is messing up or you're not getting profitable trades, you can then look further out and then see if the overall pattern of the market is still going sideways. But the mistake is not to do it the other way around. The mistake is not to say, well, okay, I'm just going to always look at the 1 week first, because you find that sometimes the market can have a 100-point swing within the sideways trend, and making lots of profitable trades within that swing. But it's always to look at it very carefully and then make objective decisions as to what to do. But yeah, sometimes it's good to look further and further out if you're having difficulties with the market. But, you know, like I said, I start with 2 days, 5 minutes. And, you know, if that gives me enough data to make a rational decision, I'll go with that. So with that, we can, like I said, going with the 2 days, 5 minutes, we saw the market going up, then started to come down, then it went sideways, then it's come down. Now it's going sideways between the pivot point and the first support, so I'm happy to use those 2 points for the first trade. And like I say, if I lose out on the first trade, then we'll look at the market again and then decide what to do. Okay, any other questions on the trade we've placed or on MACD? Okay, so if you have no questions, we'll go to the option screening. Again, like I say, if you have any questions on the MACD or on trading in general, do go ahead and ask while we go through the options screening. So like I say, after the webinar, do check your email boxes. Make sure you all have the webinar invitation for 2:50. Like I said, we're going to meet again at 12 midday, and the last meeting of today will be at 10 to 3. If you check your emails and check your spam boxes after the webinar, if you don't have the invitation, do send me an email and I will resend it to you. Right, we're going to go through the watch list. See if we have any opportunity. I will just go through some selected stocks because I've gone through the watch list already. So I'll just go through some selected stocks that are of interest, just to save time. So we'll start with okay. Now, it's one of interest. You can see, like I say, you first look at the broad market, and the broad market, which is Dow Jones, is uptrending. So we're looking for call options, and the criteria we're looking for, number one, that the stock is uptrending, and then if it's uptrending, we're waiting for it to become oversold, and then once it's oversold, we're waiting for it to close above the moving average 7 within 5 working days. So we can see this stock, BIDU. You're going to get an email of all these stocks and the details after the webinar too. So you can see the stock is uptrending, so it's fulfilled the first criteria. The next criteria is that you can see at the close of trading yesterday, it became oversold at minus 82, the Williams percentage R. So it's become oversold. Close of trade yesterday. So we're going to wait to see if it will close above the moving average 7 within 5 working days. So that's one we're going to keep an eye on. Now this is another one of interest. Now this is the stock we were initially watching. We can see the first criteria, the moving average 30 going up. It became oversold on that day, the 26th of April, because you can see the Williams percentage R was minus 96. So it became oversold on that day. But you can see 1, 2, 3, 4, 5. So after 5 days, it has still not closed above the moving average 7. So we're going to abandon this trade. We're just going to ignore this stock. We're not going to place any call on this. So we'll go back to the drawing board with this. We're going to wait for it to trend again, wait for it to pull back before we decide to place a call on this. So we're going to abandon the trade on this one. Okay, so that's another stock that's fulfilled the criteria. So you can see, again, first one is the stock is uptrending, moving average 30 is uptrending. And then you can see close of trading yesterday became oversold. And you can see the Williams percentage hour was minus 80.38. So first criteria has been fulfilled. Uptrending stock became oversold. Close of trade yesterday. Again, that's the beauty of options trading, because it's a bit like swing trading. You do all your analysis when the market has closed. So you don't have to, you can take your time and do your analysis. And then, like I said, at 2:50 this afternoon when we meet, after we've placed our day trading, we'll also place an options trade and see how you actually place live trades once, excuse me, once the stock has fulfilled the 3 criteria. Because after it's fulfilled the 3 criteria, you then place an options trade on that. So what we mean is the first criteria is to make sure the stock is uptrending. Second criteria is that it's been oversold. And the third and final criteria is that after it's been oversold, it's closed above the moving average 7 within 5 working days. Now, say for argument's sake or for academic purposes, if that's what we saw today, that the market closed above the moving average 7, then when the market opens today, we would then look to place a call option on this stock. And like I said, we'll do that this afternoon at 2:50. But the session will be recorded, so if you missed it, don't worry. So that's one that we're going to be watching to see if it closes above the moving average 7. Again, you also get an email of all the stocks I'm talking about that have fulfilled certain criteria. So we'll go to the next one, HP. So again, this is another stock that we're looking at. You can see initially it was uptrending, so it fulfilled the first criteria there. Then it became oversold at that point, minus 91. So we're waiting for it to close above the moving average 7 within 5 days. So that's 1, 2, 3. But this one, I've abandoned it because you can see, although it's just 3 days and it could still close above the moving average 7, but you can see just from technical analysis that, you know, it's fallen, it's gone up, and now it's beginning to fall. So I'll be extremely reluctant to place a call on this stock that looks like it's on its way down. So I've just abandoned that one. So sometimes it's just using basic technical analysis to decide whether to abandon that trade. So that one is just going to abandon it. The stock value is just falling. Okay, so it's another one. You can see stock is uptrending, fulfilled the first criteria. Close of trade yesterday, it became oversold at minus 85. Williams percentage R, so we're just going to wait and see if this closes above the moving average 7 within 5 working days. There's a couple more, and that will be it. So like I said, I've saved you the bottom of going through the whole thing. I've gone through the whole thing and I've just picked out the ones of interest. So this is another one that we've abandoned the trade. Again, uptrending, became oversold on that day. with then percentage are minus 85. But you can see 1, 2, 3, 4, 5. So after 5 days, it still hasn't closed above the moving average 7. So we've abandoned that trade. Okay, and that's another one. First criteria has been fulfilled. Stock is uptrending, and then close of trading yesterday. You can see it's closed. It became oversold at minus 80. So first criteria has been fulfilled. Stock uptrending. With the moving average 30 going up. Second criteria was fulfilled. Close of trade yesterday became oversold. So we just wait for it to close above. See if it closes above the moving average 7 within 5 working days. Okay, that's another one. So uptrending, and close of trade yesterday became oversold at minus 81. And the last one. Again, now it's uptrending. So first criteria fulfilled, and close of trade yesterday became oversold at minus 90.24. So again, we'll wait to see if it closes above the moving average 7 within 7 days. So you get an email sent to you all about all these stocks I've just been talking about and details about what I've just said. And like I said, we'll also place a dummy trade this afternoon. Let's see, there's some questions here. Yes, this has been recorded. So yes, this has been recorded. So yes, this session has been recorded, and also the one at 2:50 when we meet will be recorded. And like I said, the meeting at 2:50 will be the last one for today. Okay, any questions before we call it a morning? We're going to meet again at 12, like I said. We're going to meet at 12. Again, just to recap before we go, market is currently trending sideways between the pivot point and the first support. If the market goes up, we'll buy just above the pivot point. If it goes down, we'll sell just below the first support. A report of high importance is due out at 3, so the market tends to trend sideways prior to the last report of high importance. So if the market takes one of those pending orders, make sure you delete the other pending order. And if that order that was taken and that live trade becomes a losing trade, you will not be placing any more trades till the report comes out. And again, like I said, once you start trading on your own, you can decide whether you want to do that. Again, that's a choice you can make, whether you just keep out of the market entirely, don't place any pending orders at all till the report comes out. But again, I said always make objective decisions, and you can modify your plan to suit you yourself. Okay, any more questions? Just have a quick look at the question box, make sure there's none there. Good. Okay, I'll just unmute you all out and